All right, let me tell you something. You're here because you want to make money. Cold, hard, cash. And I'm here to tell you about a strategy that can help you do just that. It's called the Fractal Flow Trading Strategy. Sounds fancy, right? Maybe a little intimidating? Forget about it. This is simpler than you think. It's about seeing the market for what it really is. It's about understanding its natural rhythm, its ebb and flow. This strategy isn't some get-rich-quick scheme, no sir. It's a methodical approach. It's about stacking the odds in your favor again and again. We're talking about identifying high-probability setups, folks. So what's the core idea? Think of the market like a river. Sometimes it's raging, sometimes it's calm, but there are always patterns, always currents beneath the surface. The fractal flow strategy helps you see these currents. It uses something called fractals. Don't worry, I'll explain. And market momentum to pinpoint when the big money is about to make a move. It's about timing. Getting in when the smart money gets in, and getting out before the tide turns against you. This is crucial, absolutely crucial for your bottom line. You want to be ahead of the curve, not chasing yesterday's news. This strategy is designed to cut through the noise. There's so much information out there, right? News, opinions, talking heads yelling at you. It can be overwhelming. But fractal flow gives you a clear lens. It helps you focus on what truly matters: price, action, and momentum. It's about understanding the underlying structure of price movements. These structures, these fractals repeat themselves on all time frames, from the minute charts to the daily charts. That's the beauty of it. Learn it once, apply it everywhere. This is powerful, people, really powerful. The goal here isn't just to make a few bucks. It's to build a consistent approach to trading. It's about developing a skill that can serve you for years to come. Imagine knowing with a higher degree of certainty when a trend is about to start or when it's about to end. That's what fractal flow aims to provide. It's not a crystal ball, nothing is, but it's a robust framework. It's a set of tools and rules that, when applied correctly, can significantly improve your trading results. So are you ready to learn how to navigate these market currents? Are you ready to make some serious money? Then stick with me. Booyah! Now let's get down to brass tacks. What makes the fractal flow strategy tick? It's a powerful combination, a one-two punch. We're talking about momentum, divergence, and fractal analysis. These are the twin engines that drive this whole thing. Think of it like this: momentum is the gas pedal telling you how fast the market is moving and in what direction. Fractals? They're like the signposts on the road telling you where the key turns and stops are. You need both. You absolutely need both to navigate these treacherous markets and come out on top. Momentum, folks, is all about the speed and strength of price changes. Is the buying pressure intense, or is selling pressure taking over? We use indicators, simple ones, to measure this. Indicators like the RSI or MACD don't get bogged down by the names. They just tell us if the market is overbought, meaning too high, too fast, or oversold, meaning too low, too quick. This information is gold, pure gold. Because extreme momentum often signals a turning point is near. It's like a rubber band stretched too tight. It's got to snap back. Then you've got fractals. Now don't let that word scare you. It's not some crazy math equation you need a PhD for, not at all. In trading, a fractal is a simple 5-bar pattern. It shows a turning point, a little peak or a little valley in the price action. These are the market's footprints. They show where the price has struggled and reversed, even if just for a short while. These little patterns are everywhere, and they are incredibly useful for identifying potential support and resistance levels. They show you where the battles between buyers and sellers are being fought. So how do these two dynamos work together in the fractal flow strategy? It's beautiful, really. We look for situations where price is doing one thing, but momentum is doing something else. This is called divergence, and I'll tell you more about that powerhouse later. Then we use fractals to confirm these signals. Fractals help us pinpoint exact entry and exit points. They give us the structure. They give us the confirmation. It's like having a detective, momentum, and a forensics expert, fractals, working together to solve the case of where the price is headed next. This combination is what gives fractal flow its edge. Booyah! All right, let's talk about one of the most powerful concepts in trading. I'm talking about divergence. This is where the real magic happens in the fractal flow strategy. It's like getting a secret message from the market, a heads up that the current trend might be running out of steam, or that a new trend is about to kick off with a bang. If you can spot divergence, you're way ahead of the herd. You're trading with the smart money, not against it. And that, my friends, is how you make the big bucks. So, what is divergence? In simple terms, it's when the price of an asset is moving in one direction, but your momentum indicator, remember our gas pedal, is moving in the opposite direction. For example, the stock price is making new highs higher and higher, but the momentum indicator is making lower highs. Houston, we have a problem. That's a bearish divergence. It's a warning sign. It's telling you that the buying pressure is weakening even though the price is still inching up. The rally is losing its mojo. It's like a car trying to go uphill, but the engine is sputtering. Conversely, you can have bullish divergence. This is your buy signal, people. The price might be making new lows, scaring everyone out, but your trusty momentum indicator is making higher lows. What's that tell you? It says the selling pressure is drying up. The sellers are exhausted. Even though the price is still falling, the underlying strength is starting to build. This is often the calm before the storm. A bullish storm, it's a fantastic opportunity to get in near the bottom before the rocket takes off. This is what we live for as traders. In the Fractal Flow Strategy, divergence is not just a signal, it's a cornerstone. We don't just trade any divergence, we look for specific types, and we combine it with our fractal analysis for pinpoint accuracy. This isn't about guessing, it's about waiting for the market to show its hand. Divergence is that telltale sign. It's the market whispering its secrets to those who know how to listen. And with Fractal Flow, you'll have the ears to hear it loud and clear. This is how you stop chasing and start anticipating. This is how you trade like a pro. Okay, team, let's drill down deeper into these divergences. Knowing the classic types is like knowing your fundamental plays in football. You got to have them in your playbook. These are the bread and butter signals that momentum traders have used for decades, and they fit perfectly into our fractal flow strategy, giving us that initial heads up. There are mainly two classic types we focus on: regular divergence and hidden divergence. Each tells a different story, a different opportunity. So listen up, because this is important stuff. First up, regular divergence. This is the one I hinted at earlier. It signals a potential trend reversal, meaning the current party is about to end. If the price is making higher highs, but the momentum oscillator is making lower highs, that's regular bearish divergence. Warning, warning. The uptrend is losing steam. Time to think about taking profits or even looking for a short opportunity. Conversely, if the price is making lower lows, but the oscillator is making higher lows, that's regular bullish divergence. Booyah! That's your signal that the downtrend might be over and a new uptrend could be starting. Get ready to buy, buy, buy. Then we have hidden divergence. Now this one is a bit trickier, but oh so powerful. Hidden divergence signals a potential trend continuation. That's right, it tells you the current trend still has legs. It's like a pit stop in a race. The car slows down a bit, refuels, and then zooms off again. So, for hidden bullish divergence, the price is making a higher low, a pullback in an uptrend. But the oscillator is making a lower low. This tells you the uptrend is likely to resume. It's a chance to add to your position or get in if you missed the initial move. And for hidden bearish divergence, the price is making a lower high, a rally in a downtrend. But the oscillator is making a higher high. What's this scream? It screams that the downtrend is probably going to continue its downward march. This is a signal to stay short or initiate a new short position. Understanding these classic divergences, regular for reversals, hidden for continuations, is absolutely key. They are the early warning system. They are the foundation upon which we build our more advanced fractal flow setups. Master these and you're well on your way. Section 5, Advanced Maneuvers, Fractal Reversal Divergence, your secret weapon. Alright, you've learned the basics of divergence. Good. Now, let's kick it up a notch. We're moving into the advanced stuff, the techniques that really give the fractal flow strategy its killer edge. I'm talking about fractal reversal divergence. This isn't just your garden variety divergence. This is like putting a laser scope on your trading rifle. It combines the power of momentum divergence with the precision of fractal patterns to nail those trend reversals with uncanny accuracy. This is where you start to see the real beauty of the system. So what is fractal reversal divergence? It starts with a classic regular divergence setup. Say price is making higher highs, but your momentum indicator is making lower highs, which is a classic bearish divergence. But we don't just jump in, no way. We wait for confirmation from our trusty fractals. Specifically, we look for a fractal cell signal to form the divergence is clear. This fractal acts as the trigger. It's the market saying, okay, the weakness indicated by the divergence is now turning into actual price reversal. It's the green light, people. Think of it this way. The classic divergence is the smoke. The fractal signal is the fire. You need to see the fire before you call the fire department, right? Same in trading. The fractal provides that concrete evidence. For a bullish setup, it's the opposite. Price makes lower lows, momentum makes higher lows, which is classic bullish divergence. Then you wait for a bullish fractal buy signal to appear. That's your cue. That's when you pounce. This extra layer of confirmation filters out a lot of false signals. It increases your win rate, and that means more money in your pocket. This technique requires patience. You can't force these setups. You have to wait for the market to deliver them to you on a silver platter. But when they appear, boy oh boy, are they powerful. Fractal reversal divergence helps you catch the very beginning of new trends. Imagine getting in right as a stock bottoms out and starts a massive rally, or shorting a stock just as it peaks before a big decline. That's the potential we're talking about here. This is not for the faint of heart, but for the disciplined trader. It's a gold mine, a veritable gold mine. Section 6. Next level trading. Fractal hybrid divergence. The pro move for big bucks. Ready to go even deeper into the rabbit hole of profits? I thought so. Let's talk about another advanced technique that will make your trading buddies green with envy. It's called fractal hybrid divergence. This is where we get really sophisticated. This is for traders who want to squeeze every last drop of opportunity out of the market. It's a bit more complex, I won't lie, but the potential rewards, huge. This is about finding those super high probability continuation trades, the ones that can really run. Fractal hybrid divergence is a bit like hidden divergence, which we talked about. Remember that signals trend continuation, but with a special fractal twist. Here's the setup for a bullish scenario. The market is in an uptrend, price makes a pullback, forming a higher low. So far, so good. Now, here's the kicker. Your momentum indicator makes a lower low, just like in classic hidden bullish divergence. But, and this is crucial, we then look for a bullish fractal buy signal to form at that price pullback. This fractal confirms that buyers are stepping back in, right where they should, to support the uptrend. For a bearish fractal hybrid divergence, it's the mirror image. The market is in a downtrend. Price rallies, forming a lower high, a classic sign of downtrend continuation. Your momentum indicator, however, makes a higher high. This is the hybrid part, often looking like a regular bearish divergence on a smaller time frame correction. Then you wait for a bearish fractal sell signal to form at that price rally's peak. Bam! That's your signal that the sellers are reasserting control and the downtrend is ready to resume its downward journey. This is precision targeting, folks. Why is this so powerful? Because it combines the underlying strength of the main trend, identified by hidden divergence characteristics, with a precise fractal entry signal. You're not just guessing the trend will continue, you're getting confirmation that the pullback or rally is over and the main trend is kicking back in. This helps you join established moves with reduced risk and higher confidence. It's about finding those sweet spots where the probability of the trade working out in your favor is exceptionally high. This is what separates the amateurs from the pros. This is how you make consistent, serious money. Section 7, the building block. What's a fractal bar and why it screams trade me? Let's get fundamental for a moment. We've been throwing around the term fractal a lot, but what exactly is a fractal in trading, especially when we talk about a fractal bar or a fractal candle formation? It's simpler than you think. No complex geometry here, folks. A trading fractal is a specific, easy-to-spot pattern made up of 5 consecutive price bars or candlesticks. It's a visual pattern that indicates a potential short-term turning point, a tiny little pivot in the market's dance. These are the micro-signals we build upon. A bullish fractal or a fractal buy signal occurs when you have a sequence of 5 bars where the middle bar has the lowest low and the 2 bars on either side of it have higher lows. Think of it like a little valley. Bar 1, higher low. Bar 2, higher low. Bar 3, lowest low. Bar 4, higher low. Bar 5, higher low. That middle bar, bar 3, that's your fractal bar, signaling a potential upward pivot. It shows that selling pressure dried up at that point and buyers started to step in, pushing prices up from that specific low. It's a small sign, but significant. Conversely, a bearish fractal or a fractal sell signal is the opposite. It's a 5-bar pattern where the middle bar has the highest high and the two bars on either side have lower highs. Imagine a tiny peak, bar 1, lower high, bar 2, lower high, bar 3, highest high, bar 4, lower high, bar 5, lower high. That middle bar, bar 3, is the fractal bar suggesting a potential downward pivot. It indicates that buying pressure fizzled out there and sellers began to push prices down from that specific high. These are your immediate clues from the price action itself. Why are these fractal bars so important in the fractal flow strategy? Because they provide concrete visual confirmation points. When we see a divergence set up, we then hunt for these fractal bars, a bearish divergence followed by a bearish fractal. That's a much stronger signal to sell. A bullish divergence confirmed by a bullish fractal. Time to get your buy orders ready. These fractals are the building blocks. They define short-term support and resistance. They help us fine-tune our entries and exits. They turn a good idea, divergence, into an actionable trade signal. They scream, opportunity is knocking. Section 8. Your trading toolkit, support, resistance, and reading the Freakin tape. Now, the fractal flow strategy, with its divergences and fractal signals, is powerful, super powerful. But we don't trade in a vacuum, people. We need to use every tool in our arsenal to stack the odds in our favor. That means bringing in some classic technical analysis workhorses, support and resistance lines, and good old-fashioned bar-by-bar price action reading. Think of these as your navigations aids, helping you confirm the signals from fractal flow and avoid potential traps. They provide context, and context is king. Support and resistance lines are your battle lines drawn on the chart. Support is a price level where a falling price tends to stop and bounce back up. Why? Because buyers see value there and step in. Resistance is a price level where a rising price tends to stall and turn back down. Sellers think it's too expensive and start offloading. When a fractal flow signal, say a bullish fractal reversal divergence, occurs right near a major support level, boom, that's an A+ setup. The confluence of signals makes it incredibly strong. It's like getting a green light from multiple traffic cops. Then there's detailed bar-by-bar price action analysis. This is about reading the story that each candlestick tells. Is a candle showing a long wick at the bottom near support? That means buyers rejected lower prices. That's bullish. Is there a big ugly red candle forming at resistance after a bearish divergence? That screams selling pressure. You need to pay attention to the size of the candle bodies, the length of the wicks, the volume on each bar. Are we seeing conviction in the move, or is it hesitant? This is like being a detective, looking for clues in every single bar. Combining these auxiliary tools with fractal flow is absolutely essential. A fractal buy signal is good. A fractal buy signal at a key support level, after a bullish divergence with a strong bullish candle pattern, that's a home run setup. That's what we're looking for. These tools help you filter out weaker signals. They help you manage your risk better. They give you the confidence to pull the trigger when the time is right. Don't ignore them. They are your trusted allies in the tough world of trading. They help you read the tape like a seasoned pro. Section 9, the grand finale, price action and momentum, the winning combo, baby. So there you have it, folks. The fractal flow trading strategy laid out for you. We've covered a lot of ground, from the basics of fractals and momentum to the advanced power of fractal reversal and hybrid divergences. We've talked about classic divergence, the importance of the fractal bar, and how to use support, resistance, and price action to confirm your trades. It might seem like a lot, but it all boils down to one crucial concept: understanding the relationship, the beautiful dance between price action and momentum. That's the heart of it all. Price action tells you what is happening in the market. It's the raw data, it's the footprints of buyers and sellers. Momentum, on the other hand, tells you how it's happening. Is the move strong and sustainable, or is it weak and likely to fizzle out? When you see price making new highs, but momentum is lagging behind, that's a critical piece of information. The market is telling you something is off. The fractal flow strategy gives you the framework to interpret these messages. It helps you see when price and momentum are in sync, signaling a strong trend, and when they are out of sync, warning of a potential change. Mastering this strategy isn't about memorizing a few patterns. It's about developing a feel for the market. It's about learning to read its language. The fractals give you the structure, the divergences give you the early warnings, The support and resistance levels give you the context, and your detailed bar-by-bar analysis gives you the final confirmation. It's a complete system. It's a holistic way of looking at the charts. It's about making informed decisions, not emotional guesses. This is how you move from being a gambler to being a calculated risk-taker, a true trader. Remember, no strategy is a magic bullet. There will be losing trades. That's part of the game. But with the fractal flow strategy, by focusing on high probability setups born from the interplay of price and momentum, you can significantly shift the odds in your favor. It takes practice, it takes discipline, it takes patience. But the rewards, they can be life-changing. So go out there, study your charts, look for those fractal flows, spot those divergences, and start trading smarter, not harder. This is your path to consistency. This is your path to profiting from the market's rhythm. Now go make some money. Booyah! If you found this video helpful, make sure to subscribe to the channel for more professional trading tutorials and market analysis. Got questions or topics you want us to cover? Drop your requests in the comments below. We love hearing from you. Thanks for watching, and until next time, trade smart and stay profitable. And